Welcome to Forex Club. Today is on Monday, 21st of July 2025, and this is lesson 4 or lecture 4 on the series that is basically meant to answer the question where price is most likely to go next. So in that lesson, we pointed this low, which I named minor sell side, So the market traded aggressively and traded below it, and we had a change of character. So I was able to catch a trade in lecture 3 here in this price swing, whereby I said, if at all we are bullish, I like to see this low held. I like to also see this low not taken out. Why? Because this was our dealing range. So at the moment, when I took this trade here, I said I expect the trend to keep. And as you can see, on the 1 hour time frame, we formed a high that traded into the new week opening gap. That was formed on 14th of July 2025. Go and find it. Then we had a retracement lower. Then broke structure and went up. So today, we had an opening gap here. These are opening gap today. This retracement happened on Friday. Last week. So you see we had this retracement on Friday. The market closed. And then we opened with the gap. So just go and mark the opening gap. Ensure you mark the closing candle of Friday and then the opening candle of the opening price of Monday. That's the new week opening gap. We traded up, came back to it, and jumped up. So this is all the trading activity that has happened on Monday. So what does this tell you? The Asian session was volatile because this happened all through the Asian session. During the London Open, we had this retracement that traded into this new week opening gap that was formed on 14th of July 2025. Go and mark it. The market retraced and respected it, and we had this price run up, and I was able to catch a trade here. So I'm trying to read the price action. I say the market is bullish, and as the market is bullish, the goal is usually to be able to catch intraday trends. I'm not trying to catch the top and the bottom. No. When I have the long-term bias, I'm very, very keen, waiting patiently for the right opportunity for me to execute using my reference points. And if you look at my reference points, I'm using the opening gaps. I'm using point of liquidity. I'm using fair value gap. Like you can see here, we have a 3-minute sell side imbalance by side inefficiency. So those, like this field tool, that's also a fair value gap. So basically, I'm using reference points to frame my trade idea based on the long-term bias. And I'm not trying to pick the top and the bottom. I just want the portion that I'm comfortably able to take from the market, and I'm comfortable with that. So I'll go to the 15-minute time frame. So it's clear. You can see we have the new week opening gap here. You can see this is on Monday here, and this was on Friday. This is on Monday. So we traded down, went up, dropped, missed the opening gap with a tick, and then expanded higher. After this expansion during the London session, we consolidated a bit and respected this new week opening gap, and now we had this price run which I was able to participate in. So this trade is clear in the 1-minute time frame. So you can see I'm trying my best to read the price action to couple my higher time frame narrative to my lower time frame. So you have to be in sync with what price is doing on a higher time frame and the lower time frame. So you have to be able to see that connection. Where price is most likely to go next. price runs to levels of inefficiency. It also runs to seek liquidity. We have this high, and this high. These are very beautiful relative equal highs that was engineered during the London Open. This one. We had some short-term consolidation here, formed some relative equal lows here, liquidated, traded below them, then expanded and formed the high, formed this high. We consolidated a bit here, engineering liquidity here at the top. This is buy side liquidity, very beautifully marked. This is a 5 minutes. Is it 5 or 15? Let me just confirm. Let me go to the 5 minutes. Yeah, it's a 5 minute sell side imbalance, buy side inefficiency. I marked. Why did I mark? I was watching, will price gravitate to the midpoint of the new week opening gap? So I wanted to see this sell side imbalance used as an inversion. No, used as a sell side imbalance to send price lower. So it was respected here one, it was respected here twice. So a bearish fair value gap, which is a sell side imbalance, buy side inefficiency, and you can see it's here. We want to see it used as a resistance, and that you can see it was respected. It was respected. No candle closed above it. So it sent price lower, and we only touched the high of this new day opening gap, new week opening gap. Price started to rally up, and I was able to catch a trade here to seek this liquidity, and chances are we might continue moving higher. Chances are this trend might keep. So personally, I'm comfortable with this price run. Let me go to the 1 minute time frame. So you can see this is the 5 minute sell side imbalance, buy side inefficiency. Midpoint dropped, came, touched the high of it, formed a sell side imbalance here. The market respected it, dropped, took out all this level of liquidity. All this liquidity was taken out. The market rallied up to the same sell side imbalance, buy side inefficiency we saw in the 5 minutes time frame, had another rally down, and now this set the momentum up. It set the momentum up, and I was able to catch this trade. So you can see we formed an inefficiency, traded into it, went up, formed this volume imbalance. The market referred to it. This is a volume imbalance. Can you see that separation? This. Yeah, so you can see that volume imbalance respected. Market rallied up, we formed another one, wicked down towards it, respected it. Moved up, formed a displacement. We formed this bullish fair value gap, came, used the low of the 5 minutes fair value gap. I showed you the fair value gap. This one, you have the low, the midpoint, and the high, the level marked with the thick maroony orange line. I'm colorblind, sorry, or brown, whichever the color you can see on the charts. So the market dropped, went up. So I was able to take an entry in the 50%, this point, this level of this 5 minutes sell side imbalance, buy side inefficiency. So I was able to take an entry here. My stop loss was down here. Why? I did not expect price to trade below here because we formed this inefficiency. This green candle opened, wicked down, balanced, and then we went up. So I expected this fair value gap to hold price higher, and that's why my stop loss was just here. Take profit. This buy side liquidity was my target. You can see the market went, traded above those relative equal highs. I've named them buy side, and this is just a beautiful scalp that I took, and now I'll show you the trader in my MT5 account.